So give us your rate lock script.
Yeah, it's definitely a pain point, especially because refinances are taking longer. You know, we're running about 60 days right now, and that's a lot of time for the market to move and a lot of mailers and phone calls that our clients are going to be getting. And so it all sets up from the beginning, right? Having that good consultation with them, advising them. And then when you go to lock the interest rate, I'm like, okay, hey, Mr. Client, we can lock you in at 2.875 today. Do we want to go ahead and secure that rate? And when they say yes, I say, okay, let me explain to you what it means to lock in your interest rate. So what that means is that we're going to secure this interest rate at 2.875, and we are no longer playing the market. So if interest rates go up in 3 days, I'm not going to call you and say, oh, shoot, sorry, your rate is 3.25 now. Same thing, you can't call me in 3 days and say, hey, I heard that interest rates went down. Can I please get that lower interest rate? And I explained to them that you've got to put your blinders on, your fingers in your ears, like don't pay attention to what's going on. We're locking you in at this rate because you're happy, you're committed to it. We're going to get this closed for you. You know, we're going to protect your rate, and we're really excited to help you with this transaction, you know? And so we have that. And then what that is it's an anchor. So if they do call us back in a month because they kind of forgot and they heard all this news about interest rates dropping, we can anchor them back to that conversation and say, oh my gosh, I totally understand why you're asking. Do you remember when we locked you in, we had that conversation about what it means to lock an interest rate? It hasn't changed. I am so sorry. I would love to give you a lower rate, but we committed to that rate. We got to, follow through on our commitment. Again, we're really excited to help you with this. We're getting closer to the finish line, and we anchor them back. And it works almost every time. Not every single time, because in the percentage of the population, typically how it goes is that 15% of the population are the ones that want the cheapest. They don't care about value. They don't care about relationship. They literally just want the cheapest. And then there is 80% of the population that cares about value and relationship, and you can trust them, and they're the ones that will follow through on that. And then you have 5% that are the ones that almost like to pay more because they feel like some ego around it. So that means that 85% of the population are our people, the people that want the advice, that, trust us. And so when that script doesn't work, that's usually because they're in the 15%, and we just have to let them go, right? Because they weren't really our client. That's not how we're set up to be.
So guys, what you just heard, and one of the reasons why she is so successful, is she knows how to navigate constructive tension. I mean, you can't close 45 loans a month unless you're a good team leader. Like, you need to know how to run a team to close 45 loans in a month. And you need to know how to be a great leader with people and have constructive tension conversations. And I know a lot of new loan officers would feel uncomfortable with that conversation. It's not a comfortable conversation to have. Guys, you need to make that a comfortable conversation to have, or else it festers, it creates dysfunction, and you can't scale. And by the way, you're not serving the client either. And I love that analogy around the 5% want to pay more. That's why there's a Neiman Marcus. That's why there's a Ferrari. There's a percentage of population that's cheapest. I don't want it. And then there are a percentage that are do it themselves, and they're gonna need the lowest price. They want to do their own loan for themselves. If you're a referral-based local mortgage professional, that's probably not going to be where you're going to scale your market. And then here's the last thing I would tell everybody on this. If you want to serve that 85% and that 5%, you need to go beyond the transaction. You need to be a fintech-enabled loan officer. And if all you're doing is solving problems, closing loans, you may get away with that with some people, because 15% of the people, no matter what you say and how you say it, you were the first one there, they do the loan with you. There's going to be a percentage of people, no matter what you say and how you say, you're never going to win it. The best salespeople deliver a value platform so that they optimize their success, which you're clearly doing.